Mike, I'm going to cut to the chase. The president will speak tonight on $104, $105 Brent crude. You spoke today with $24 per hour on your wage. How are you going to do this at $24 an hour, a blended $48,000 a year for line employees?
Well, I'll tell you, the investments that we make in our team from my seat are the best investments that we make. And that's been a path of investment over years now. We laid a path to get to a $15 starting wage back in 2017. Yep. Accomplished that a couple of years ago. We've invested in additional benefits. We've invested in tuition-free education assistance. And we see those investments paying off. You can see it in the results that team delivered in our fourth quarter with growth of 9%.
Just because of time, I don't mean to cut you off, but I think this is so important, Michael, because you led on this, and you, and I'm going to say Amazon, Jassy, and the rest are in the crosshairs on this. Are we having an arms race right now for line employees?
It's definitely a tight labor market, but our story might look different than what you'd hear elsewhere, in that we track our ability to attract and retain those metrics really closely. Those metrics are stronger for us right now than they were pre-pandemic. So we see the result of that investment over time really paying off with a team that wants to come to work at Target, and that best team in retail is delivering.
Michael, this is one side of the equation that you have a bird's eye view on, the employment aspect. The other side is consumers' willingness to keep spending at the same pace, even as they see their price of gasoline rise to the highest level since 2014, even as wheat futures rise to the highest since 2008. How do you game this out when you talk about pricing, when you talk about passing it on to the consumers and your ability to do so? Is time running out to keep passing it all on directly?
Yeah, we certainly see the inflationary cost pressure in the environment, but we tackle that really through the lens of our guest. We're fortunate. We have a lot of levers to pull within our business to make sure that we're protecting value for our guest. And price is the lever we pull last, not first. And that investment in value is working. If you look at our fourth quarter results, that 9% growth, it came almost entirely from traffic. That means guests picking Target more often, whether with their footsteps or clicks to our website. And so those investments in protecting value are paying off.
Michael, I'm asking because you sort of are at this cross-section of what we talk about every day. We're talking about what's going on with Russia invading Ukraine, the possible disruption of supply chains, the possible ramifications on growth of oil prices. And I'm wondering how you factor these things in. Have you been scouring through your supply chains and looking for possible disruptions, either from this or other prospective conflicts? I mean, how does this factor in to your day-to-day decision-making?
As you might expect, it's a situation we monitor really closely. And I'll start by just saying our hearts go out to everyone impacted by the situation in Ukraine. I know it weighs heavily on my mind, our Target team, and our guests. We're fortunate we've got the benefit of a really sophisticated supply chain that's navigated a lot of challenges over the last 2 years incredibly well. I feel really good about our inventory position today, up 30% to last year. That's a testament to us working through some of those supply chain challenges, so we should be well positioned to start the year.
Have you found that you've actually gotten a lot of market share from smaller businesses simply because you have that ability to really rejigger supply chains and streamline certain costs so that you can pass it along?
When we look at our market share gains over the last couple of years, we see them coming from a variety of places. And some of that goes to, the market share story by category. As you know, we've got strength across so many categories, from a really strong apparel business to a strong food and beverage business. And each of those categories grew double digits in the last year. And so the market share story is a little different by category, but it's a wide set of sources.